All right, let's dive into Rich Dad, Poor Dad.
Okay.
We got some excerpts from the book by Robert Kiyosaki.
Yeah.
And, it's like a classic in personal finance now. It really challenges some traditional thinking about money.
Right.
So today, I kind of want to unpack some of his core ideas.
Yeah.
And, we're going to look at the whole idea of assets and liabilities
Okay.
and how important financial education really is for your life.
Yeah.
And we might even figure out why playing it safe could actually a riskiest move of all.
Yeah, one of the things that Kiyosaki says in the book is that
Okay.
conventional wisdom, especially around money, can sometimes lead you down the wrong path.
Yeah.
So he really wants you to question
Yeah.
those ingrained beliefs we all pick up about work and wealth.
Yeah, absolutely. And he kind of does this
Yeah.
by introducing us to these two contrasting figures. His own father, the poor dad,
Yeah.
and then his best friend's father, the rich dad.
Right.
And they have totally opposite views on money,
Yeah.
which really forced Kiyosaki to think for himself.
Right. It's almost like they represent two different paths you can take in life.
Interesting.
And the poor dad believes that the love of money is the root of all evil.
Okay.
And the rich dad counters with the lack of money is the root of all evil.
Wow.
So hearing these two different perspectives
Yeah.
at a young age really set the stage for Kiyosaki's own journey.
That's so interesting. And what I find really interesting, too, is that Kiyosaki doesn't just blame the lack of money for
Okay.
people's struggles financially.
Right.
He also points out that one of the biggest problems is the lack of financial education.
That's right.
He says that schools don't really equip us
Mm-hmm.
with the knowledge we need to manage money well.
Yeah.
Which is why even highly educated professionals
Right.
can end up in debt.
Yeah. And he illustrates this point with a great story.
Okay.
He talks about how he and his friend Mike started this little toothpaste counterfeiting business
What?
when they were kids.
Oh, wow.
They had the entrepreneurial spirit, but they lacked the financial know-how.
Oh.
And ultimately that led to the business failing.
Wow. So it's like that early experience shaped his whole perspective on money.
Yeah.
It made him realize that being successful isn't just about working hard.
Right.
It's also about understanding how money works.
Exactly.
Yeah.
And that brings us to another important concept in the book,
Okay.
the rat race.
The rat race. Okay.
Kiyosaki describes how most people just get stuck in this cycle
Right.
of working for money, paying bills, and just accumulating debt.
Yeah.
They're constantly chasing a paycheck, but never really getting ahead.
Yeah. And he tells this fascinating story
Okay.
about how his rich dad purposely paid him and Mike like a measly 10 cents an hour
Wow.
to work at his convenience store.
Interesting.
Now, at first, this seems unfair.
Right.
But there's this really powerful lesson behind it.
So the low wage, it wasn't about exploitation. It was a deliberate strategy.
Okay.
He wanted to teach the boys about this trap of working for money just to make ends meet.
Oh.
It forced them to think creatively and find alternative ways
Yeah.
to generate income.
Oh, wow. I like that.
Yeah.
That's a really clever way to teach a lesson. It made them realize they could create their own opportunities instead of being trapped in a system.
Right, and this directly ties into one of Kiyosaki's most crucial distinctions,
Okay.
the difference between assets and liabilities.
Okay.
Are you focused on things that are generating income for you,
Right.
or are you accumulating things that are costing you money?
Wow. Such a crucial question.
Yeah.
Kiyosaki breaks it down by saying that rich people acquire assets while the poor and middle class acquire liabilities that they mistake for assets.
That's right.
To understand this better, it's helpful to visualize your finances like a river.
Okay.
Assets are tributaries feeding into the river, and liabilities are leaks draining the river.
I love that analogy.
It makes the concept so much clearer.
Yeah.
So basically, things like real estate, stocks, and bonds,
Mm-hmm.
those are considered assets because they generate income.
Exactly.
And on the other hand, we have things like mortgages, car loans, and credit card debt.
Yeah.
Those are liabilities because they take money out of your pocket.
And often with added interest.
Right, exactly.
So Kiyosaki really drives home the point that
Yeah.
you need to understand where your cash is flowing.
Okay.
Is it working for you?
Right.
Or is it working against you?
It's like he's saying you need to become a detective.
Uh-huh.
You got to track your money and figure out
Yeah.
if it's helping you build wealth or if it's dragging you down.
That's right.
And this ties into his whole idea of the middle class trap.
Yes.
He explains how people get caught in this cycle of
Right.
working harder, getting a raise, but
Right.
then spending more and paying more in taxes.
Mm-hmm.
It's like they're running on a treadmill,
Yeah.
but going nowhere.
Exactly.
And one of the biggest things that contributes to this is the belief that your home is your primary asset.
Right. And while a home can provide shelter and that sense of security,
Yeah.
Kiyosaki argues that relying on a paycheck and viewing your house as your ticket to wealth can actually lead to financial insecurity.
Wow.
Especially in a volatile economy.
Oh, right.
Putting all your eggs in one basket like that
Right.
can be really risky.
He actually tells this story about some of the richest businessmen of 1923.
Oh, wow.
Many of whom died broke despite their initial wealth.
Wow, that's really interesting.
It's like it challenges this assumption that having a lot of money automatically equals financial security.
And that's because true financial security comes from understanding how to use money to create more money, to protect it, and to make it grow.
Right. And so that's where the concept of financial IQ comes in. Exactly.
It's not just about being good at math.
Right.
It's about having a well-rounded understanding of accounting, investing, markets, and even the law.
He's emphasizing that financial success requires a broader skill set.
It's like having a toolkit with all the right tools to build a solid financial foundation.
Yeah, and this reminds me of how Kiyosaki actually created the Cash-a-Filo board game to try and make financial literacy more accessible and engaging.
I love that game.
It's a simulation of real life that helps you develop those essential skills.
It's brilliant, and he actually shares this story about a woman who demanded a refund for the game because it reflected her own bad financial habits.
That's funny.
It goes to show how powerful self-reflection can be when it comes to money.
Sometimes we need to see ourselves clearly to understand where we need to improve.
It's like holding up a mirror to your own behavior. Yes, exactly.
That's what the Cash-a-Filo game does so well. It helps you identify your blind spots and develop strategies to get ahead.
And Kiyosaki also talks a lot about overcoming fear and laziness when it comes to money.
Absolutely. He argues that the fear of losing money can be paralyzing and prevent people from taking the risks they need to take to build wealth.
He even uses remember the Alamo anecdote to illustrate this point? Sometimes you have to just embrace failure as part of the journey. Just like those Texans who saw it as inspiration to keep fighting. It's about shifting your perspective and viewing setbacks as opportunities for learning and growth.
Okay, so not reasons to give up.
Exactly, and that brings us to another crucial element. His pay yourself first strategy.
Oh, right.
It emphasizes prioritizing your financial well-being by consistently setting aside money for your asset column, even when you feel like you can't afford it.
It's a great reminder that we should treat our financial health as a priority, just like we do our physical health.
It's like putting on your own oxygen mask
first
before helping others.
Exactly.
Kiyosaki even said that pressure of paying himself first actually forced him to become more creative and find new income streams. It pushed him to develop his financial intelligence.
Wow. That's amazing.
Yeah.
So it's like this pay yourself first strategy is really about pushing yourself to think outside the box.
Yes.
And that leads us to another really important aspect of his philosophy, and that's taking action.
Yes.
Kiyosaki is a firm believer in actively seeking out opportunities rather than just passively waiting for them to come to you.
He learned about tax lien certificates and immediately went to the county tax office to find someone who could teach him more.
That's impressive.
It's about being proactive and taking concrete steps to educate yourself.
I'm already starting to see how Kiyosaki's ideas can help anyone think differently about money.
It's definitely eye-opening.
Yeah, and this is just the beginning.
Oh, yeah.
There's so much more to uncover.
So much more.
About his approach to overcoming fear, finding mentors, and developing a truly wealthy mindset.
Right.
Well, before we jump into all that, let's take a short break.
Okay.
And then we'll come back and explore even more.
Sounds good.
Of Kiyosaki's insights.
I'm ready.
So we talked about assets and liabilities and the rat race. But Kiyosaki also has some pretty strong opinions about traditional education.
Right.
Like, remember that book? If you want to be rich and happy, don't go to school.
Yes.
I'm curious to hear what you think about that.
It's definitely one of his more provocative statements.
Yeah.
And I don't think he's saying that all education is bad.
Right.
Or useless.
Right.
He's challenging this idea that a traditional education is the only path to success.
He seems to be saying that the way education is now doesn't really prepare people for the real world when it comes to building wealth.
Exactly. He believes that it focuses too much on rote learning and standardized tests and not enough on practical skills like financial literacy, critical thinking, problem solving.
Remember when he quit his job at Standard Oil after like 6 months to join the Marine Corps?
I do.
Even though his educated dad was totally against it.
Yeah, that's a great example of how Kiyosaki really valued experiences that taught him real-world skills.
Yeah.
Even if it meant going against conventional wisdom.
Yeah, exactly.
He saw the Marine Corps as an opportunity to learn leadership, discipline, and resilience.
Yeah.
All things he considered essential for success.
Absolutely. And that commitment to lifelong learning is a recurring theme throughout the book.
It is.
He encourages people to always be looking for new knowledge and experiences.
Yeah.
Even if it means getting out of their comfort zone.
Right.
He even talks about taking a second job just to learn a new skill.
Wow.
Even if it doesn't pay well. And remember those classes he took on derivative trading and commodity option trading?
Yeah, he really was dedicated to expanding his financial knowledge.
Yeah.
He's a big believer in being a lifelong student.
Okay.
And constantly investing in your own education.
Yeah, and that includes finding mentors.
Yes.
People who have already achieved what you want
right.
and can give you guidance and support.
That makes me think about all the practical advice that Kiyosaki gives about overcoming fear and laziness.
One of the things that really stood out to me was his pay yourself first strategy.
Oh, that's one of his core principles.
Right.
It's about making your financial well-being a top priority. And consistently setting aside money for your asset column.
Even when you feel like you can't afford it.
Even when you feel like you can't afford it.
It reminds me of that saying, you can't pour from an empty cup.
That's a good one.
You have to take care of your own financial health first.
Yes.
Before you can really help others.
And Kiyosaki actually found that the pressure of paying himself first made him more resourceful. And it helped him find creative ways to generate income.
Right.
It pushed him to develop his financial intelligence and find new opportunities.
It all ties into this idea of taking action.
Yes.
It's not enough to just have good ideas. You have to actually do something with them.
Remember that story about how he learned about tax lien certificates and immediately went down to the county tax office to find someone who could teach him more.
Yeah.
That's a perfect example of his proactive approach.
He's all about seeing an opportunity and then taking concrete steps to learn and capitalize on it.
He's not afraid to put himself out there and ask questions.
Even if it's uncomfortable.
Even if it's uncomfortable at first.
And he emphasizes that you don't have to start big.
Right.
You can start small just like he did.
Yeah.
And gradually build your asset column over time.
He believes that consistent action, even in small increments, can lead to significant results.
It's like that saying, the journey of 1,000 miles begins with a single step.
Exactly.
Kiyosaki also stresses the importance of having the right mindset. Your thoughts can really shape your reality, and overcoming your limiting beliefs about money is essential for achieving success.
It's about shifting from a scarcity mindset to an abundance mindset.
So instead of focusing on what you lack, focus on the possibilities and the opportunities.
He wants people to break free from the poor or middle class mindset and start thinking like rich people think.
So it's not just about having money. It's about having the right attitude.
Exactly. And one of the key distinctions in Rich Dad, Poor Dad is that rich people buy assets, not liabilities.
Right.
They understand that true wealth comes from owning things that generate income, not accumulating things that drain their bank accounts.
Right.
And they're not afraid to take calculated risks.
And to step outside of their comfort zone.
Exactly.
Kiyosaki talks about how his friend lost a lot of money in a real estate deal.
Wow.
But used that experience to become a successful investor.
So it's about seeing those setbacks as learning opportunities.
And constantly improving your financial intelligence.
He emphasizes that you don't need to be a genius to be successful with money.
Right.
You just need to be willing to learn, take action, and surround yourself with the right people.
And speaking of the right people,
yes,
Kiyosaki talks a lot about finding good advisors.
Yes.
Like brokers, attorneys, and accountants.
He believes in paying professionals well for their expertise because it can save you money and help you make more money in the long run.
So he sees it as an investment, not an expense.
Exactly. He wants people to find advisors who are aligned with their goals and have a proven track record.
He also gives some really good advice on how to spot good deals and avoid getting caught up in the hype.
Remember how he talks about how people rush to buy when the market is up, but they shy away when there's a crash or a correction?
Yeah, it's like he wants people to think differently.
Yeah.
To see opportunities where other people see risk.
It's about going against the crowd.
Yeah.
Trusting your own judgment.
He also talks about thinking big.
Yeah.
Even if you're starting small.
Remember the story about how he and his friends pooled their money to get a volume discount on computers?
Yeah.
It's a great example of how you can leverage your resources, your connections, to create win-win situations.
And he emphasizes the importance of learning from history and studying the success of others. He talks about how all the big companies on the stock exchange started out small.
Right.
And Colonel Sanders didn't become successful with Kentucky Fried Chicken until he was in his 60s.
It's about recognizing that success takes time and perseverance.
And finding inspiration from those who've already achieved what you want.
Exactly.
Kiyosaki talks about how he studies the investment strategies of people like Warren Buffett and Donald Trump.
Interesting.
He's trying to understand their thinking and their decision-making.
So it's about modeling success.
Right.
Learning from the best.
He wants people to find heroes and then study their approaches.
Even though Kiyosaki emphasizes building wealth, he also talks about giving back.
Right.
And how generosity can create more abundance.
He shares stories about how even when he was short on money, he would give to his church or to his favorite charity. And then things would always seem to work out for him.
So it's about shifting your focus.
Yeah.
From scarcity to abundance.
He believes that when you give freely, you open yourself up to receiving more.
He also emphasizes that teaching is one of the best ways to give back.
He believes that when you share your knowledge, you not only help other people, but you also deepen your own understanding.
It's a win-win situation.
Yeah.
Now, while we're on this topic of sharing knowledge, I think it's important to address some of the criticisms that Kiyosaki has faced for his views on corporations and taxes.
Some people have interpreted his advice as advocating for tax evasion, which I don't think is accurate.
Yeah, it's crucial to understand that Kiyosaki is not encouraging people to break the law. He's simply pointing out how the wealthy often use legal strategies to minimize their tax liability.
He's advocating for financial literacy. For understanding the rules of the game so you can play strategically.
That's right.
He wants to give people the knowledge to make informed decisions about their money.
He's challenging people to think differently about money, to question conventional wisdom, and to take control of their own financial destiny.
His ideas can be a little radical, but I think his core message is about empowerment. And taking responsibility for your financial well-being.
I think that's a great way to put it.
It's fascinating how Kiyosaki challenges that traditional path to success, right? It's almost like he's saying you need to be a little bit of a rebel to break free from the whole go to school, get a good job, save your money kind of thinking and forge your own path.
He encourages people to think outside the box. To question the status quo. To explore alternative avenues to wealth.
And one of the ways he suggests doing this is through entrepreneurship. He's a huge advocate for starting your own business, building your own asset column, rather than just relying on someone else for a paycheck.
He says when you're an employee, you're working to make someone else rich.
Yeah, that's an interesting way to put it.
And while there's nothing inherently wrong with having a job, he really believes that financial freedom comes from owning your own business.
Yeah.
And having your money work for you.
It's about taking control.
Yes.
Of your income and your destiny.
And he's not just talking about starting some giant corporation.
Oh, wait.
He talks about investing in real estate, stocks, other assets that can generate passive income.
It's about creating multiple streams of income. That's so you're not relying on just one source.
And he even suggests looking at opportunities in emerging markets.
Okay.
Like South America and Asia.
Wow.
He's always thinking about where that next wave of growth is going to be and encouraging people to do the same.
So you got to be proactive. You can't just sit back and wait for opportunities to come to you.
You have to go out and find them.
And that means taking risks.
He talks about how most people are so afraid of losing money that they never actually make any real money.
It reminds me of that story about his friend Richard, who passed up on this great real estate deal.
Oh, right.
Because he was worried about paying too much.
He let fear get in the way.
Yeah.
Of a potentially lucrative opportunity.
That's a perfect example of how fear can be so paralyzing.
Yeah.
Kiyosaki says it's not about eliminating fear completely.
Right.
It's more about learning how to manage your fear.
And taking calculated risks.
Exactly.
He makes this great analogy.
Okay.
Comparing investing to playing tennis.
Okay.
You're going to make mistakes.
Yeah, of course.
But you got to keep practicing.
Right.
And learn from your errors.
It's all part of the process.
He talks about the importance of having a stop in the stock market.
Right.
So that's like a predetermined price.
Right.
Where you'll automatically sell.
Yeah.
If it starts to drop too much.
Oh, so it's like a safety net.
Exactly.
To limit your losses.
So you're being strategic.
Okay.
You have a plan in place. Even when you're taking risks.
Along with managing risk, Kiyosaki also gives some advice on overcoming laziness and procrastination.
Yeah, he really believes in the power of setting goals and taking action.
That pay yourself first strategy.
Oh, that's a perfect example.
Right.
Even if you're a little short on cash, setting that money aside for your future creates this sense of urgency.
Right.
It forces you to be more resourceful.
It's like a really clever way to kind of motivate yourself. It's about taking control of your money and making it work harder for you.
And it ties into the idea of being a good steward of your money.
Right.
He's not saying to be reckless or irresponsible.
Okay.
It's about being mindful.
Okay.
Making informed choices.
Yeah.
Ensuring your money's aligned with your goals.
He makes a really interesting point. He says while tipping servers in a restaurant is fine, you should be more willing to invest in professionals.
Right.
Like brokers and attorneys who can help you build wealth.
It's about understanding the value of expertise.
Exactly. And investing in things that will help you reach your financial goals.
One of the big takeaways from Rich Dad, Poor Dad is that financial education is not optional.
Right.
It's essential.
He really encourages people to read books, attend seminars, constantly be learning.
Expand that knowledge base.
He even suggests finding someone who has already achieved what you want.
Right.
And taking them out to lunch.
Yeah.
Just to pick their brain.
Be proactive. Seek out mentors.
Right.
Leverage the experience of others.
And it's never too late to start.
That's right.
So what does all this mean for our listener?
I think he's really trying to say that you have the power to create your own financial destiny, regardless of where you came from or your education.
It's about taking ownership.
Yeah.
Responsibility for your financial well-being.
Challenging assumptions.
Right.
Overcoming fears.
Taking action.
Building the life you want.
It's been a really insightful look into Rich Dad, Poor Dad.
It really has.
His ideas are really interesting. Right. And whether you agree with all of them or not, it's hard to deny the importance of taking control of your finances and building a strong foundation for your future.
And as Kiyosaki would say, it all starts with taking that first step.
Exactly. Well, thanks for joining us today.
Thanks for having me.
On this deep dive into Rich Dad, Poor Dad.